Hello, everybody, and welcome back to video number 2 in Chapter 16. And when we left off, we were going to look at how we would prepare a production cost report using weighted average. Okay, so here is that production or process cost report. Now you'll notice that here are our units to account for, and here are the units accounted for, the same numbers that we used in the previous slides. Here we had our beginning work in process. That would have been the ending March number. And then the units started in April. And then here's the units that we completed and transferred out in April, and our ending work in process at the end of April. Okay, then we completed our equivalent units of production in step 2, where we completed and transferred out 100 units, 100,000 units of direct material here, and our equivalent unit and 20,000 units of direct materials at 20,000. So our equivalent units of production for direct materials, you'll remember, was 120,000. But in conversion costs, that percent complete is 100% for that which we've transferred out, but only 25% for our ending work in process. And we multiply that 25% times the 20,000 units here, and our equivalent units of production is 5,000 units. Okay, now once we have that, then we can put some dollars to it and calculate our cost per equivalent unit of production. And so we're given $81,000 of cost in beginning work in process. We added 279,000 in this period for direct materials. And so our total direct material costs were $360,000. We divided that by 120,000 and equivalent units of production, and that came out at $3 cost per equivalent unit of production. Now for conversion costs, we had the 108,900, the $376,200, which adds to $485,100. This time we're going to divide by 105,000 equivalent units of production, and that gives us $4.62 per equivalent units of production. So that pretty much was what we did in the prior slides. Now we take the units here, direct are 100,000 units and 100,000 conversion, direct material 100,000, conversion 100,000, multiply them through by the two appropriate equivalent units of production per unit, and that comes out a total cost of $300,000 for direct materials and $462,000 for conversion, a total of $762,000 for completed and transferred out. But then we have ending work in process to consider, and we had the 20,000 direct materials, conversion though of 5,000. You'll remember that was the 20,000 times 25%, or 5,000 equivalent units of production. And that gave me $60,000 plus $23,100, total of $83,100. So the grand total costs to be accounted for was $845,100. Okay. So that's the production cost report, again, for the roasting department at the end of April. Now, let's take a look at the flow of production costs in the process costing system. Here is an example. First of all, our raw materials. And as usual, our raw materials are going to go into the roasting department here, right? And we have some indirect materials that are going into factory overhead. And of course, we have other overhead that's added to factory overhead. And we have indirect labor that's added to factory overhead. And then the payroll costs are going to, for direct labor, are going to roll into work in process. And the direct materials are going to roll into work in process. And we're going to apply overhead just like we did with the job order costing system. So now we've packaged our fit mix and roll that into finished goods inventory. And one of two things happen. We either sell it and it becomes cost of goods sold, or we keep it and it stays in finished goods inventory and becomes our ending inventory amount. Okay. Pretty similar in concept, at least, to job order costing. All right, so now here is our cost data for the month ended. Our raw materials inventory at the beginning of March, or the end of March, I should say. Our beginning work in process inventories. We have roasting and blending. So these numbers you'll recognize, the 189,900, and the raw materials, of course, of 100,000. And then we also have a blending department where we're adding in some, additional costs here. So the materials purchased, let's say on credit using AP, accounts payable, totals $400,000, the sum of all of these three items. And then the material recs during April, we recced in direct materials here and direct materials here for the roasting and blending departments, along with some indirect materials that go into the overhead pool. Now, factory overhead, we had direct labor during April here in the roasting department and direct labor in the blending department, along with some indirect labor that went into the overhead pool. Now, there's other overhead costs added in April, which we explained, I think, in the job order costing chapter. But here is our other overhead costs: insurance expense for the factory, utilities expense for the factory, depreciation expense for the factory equipment, and some other items that we paid in cash. So all of these other overhead costs go into the overhead pool, along with indirect labor and indirect materials. So you can see this is starting to get a little more complex than job order costing. So if we look at the journal entries, some of these are relatively straightforward. We buy $400,000 worth of raw materials inventory. And you can see that number here, the total of our beginning raw materials plus our work in process roasting and blending, 400,000. Now, we're going to move these out of raw materials inventory and into work in process inventory for roasting and blending. This is going to be direct materials. they're going to go into work in process inventory here. But we also have some indirect materials that go into the factory overhead here and here. So again, we're pulling that out of raw materials inventory in both situations here and putting it into the plant floor, the work in process. Now, direct labor, we're going to put work in process for roasting and work in process for blending here and here, and credit factory wages payable. But we also have some indirect labor that we used, and that would go into the overhead pool here. And we would create factory wages payable for our indirect labor used, as we did for the direct labor used. And those numbers are coming, of course, from our numbers here, here, and here. So now we have the other factory overhead items. And here is our actual factory overhead recorded as a debit, and our expenses here, here, and here that we used to record other overhead costs that were incurred actually, right? All right. So now, if I look in the production department, we have a predetermined overhead rate, and that had been previously calculated here at 120%. So we take our direct labor here. Let's go back. Here's our direct labor here and here, and we're multiplying that times the 120%, right? 100, oops, no, I'll get it, 120%. So that comes out 205,200 for overhead in the roasting department and 219,792 for the blending department, total of 424,992. So we book our journal entry, debit to work in process inventory, and a debit to work in process blending, and we're going to credit factory overhead here, right? So if I look, whoops, if I look back here, okay. So now we're going to look at recording the transfer of goods across departments to finished goods inventory, and finally then to cost of goods that we might sell. So here, finally, we debit work in process inventory for the blending department and move that out of the roasting department and into the blending department. And that's how we transfer that work in process inventory from roasting to blending here and here. So now, if we look at the T accounts here a little bit, here we started with 30,000, or beginning with 30,000, we started 90,000. So that was a subtotal of 120,000. 100,000 units were transferred to blending out of the roasting department and into the blending department. And we started with beginning inventory here. We added the 100,000, but we moved 97,000 units to finished goods inventory, leaving 15,000 units in ending inventory. That looks like a good place for us to stop this video. And when we return, we'll finish off explaining transfers across departments. Until that time, bye for now.